Hello guys, welcome to FS page. Today I quickly want to introduce you to wedge. So we have a rising wedge and a falling wedge. A rising wedge looks somehow like this. Price goes up into a wedge-like formation, and as it goes up, the momentum reduces. It reduces until we have a breakout. So when we have something like this, it is known as a rising wedge. And in the falling wedge, we have a bearish move. After that, you see that price begins to consolidate. The momentum of price dies down, and we have something like this until price breaks out in this direction. So this is a falling wedge which forms after a sustained bearish move, and this is a rising wedge which forms after a sustained bullish move. When it occurs this way, it shows that the momentum is dying, and when we have something like this, we should be looking for a breakout to the downside. And when we have it such as this, the same thing occurs. We should be looking for a breakout to the upside, because a rising wedge is a bearish pattern and a falling wedge is a bullish pattern. So a wedge can either be a continuation or a reversal pattern. So quickly, let us go into a live chart so that I can show you real example. As you can see, this is a bullish trend, and you can see the momentum at which price used to get to this point. After that, you see that the momentum begins to die, and you can see this steep slope up. Let me draw it out for you to see. You can see this steep slope up, and you can see this also. So this is a rising wedge, and like I have said previously, when this occurs, you should be looking for opportunity to short this. The target should be the length from the resistance to the support. So you measure and you take it to where the breakout occurs. That is how you determine your target level. So let's say the breakout occurs here. Our target is supposed to be here, which is the equal length from here to here that I measured. Then our stop loss is supposed to be somewhere here above this resistance level, and our entry, wherever the breakout occur, should be that way. So this becomes our stop loss, our entry, and our target. So if you have something like this, let me get rid of this so that you can see it clearly. You can see the next candle opens to the upper part but still closed inside the wedge. After that, we have a bearish candle, and after that we have a breakout. You can see this bearish candle broke out. So our entry ought to be here. This is the best place for us to enter. So if we enter, what do we have? See price almost, see at this point now our target has been hit. So look at our entry here and look at our target here. You can see that the risk to reward ratio is like 1:1. So this is not the best thing. By watching the health of this candle that hits our target, you can see that this momentum is high. So it's best we close some of our positions here and allow our wins to run. So let's see, price has returned back again. It's as if it's reversing. After that, see what we have. price came all the way. See? So if we have something this way, it's better we close some of our positions here and allow the rest to run, because you can see this structure. When you see a structure where we have support such as this, price always come back to retest the support. So it's good you put your target around somewhere like this. This will give you a higher risk to reward ratio. So speaking based on structures alone, you know that the possibility of price coming to retest this place is high. So it's good you close some of your position at this point and allow the rest to run. So with this, you see, price finally came down to test this previous support. So this is a Euro USD. After this sustained bearish move, you see that price got to this place and momentum begins to die down. So what we have here, we have this measure from here to here, we have this, and we have this. So this is a continuation pattern. How do we enter this trade? As it is the same as the previous rising wedge, but this is an example of a continuation pattern. So when we have something like this, we also look out for a breakout. At the same time, our target level is from the resistance all the way down to the support. All the way down to the support. So this becomes our target, which we measure from somewhere like this, wherever the breakouts occur. Then our stop loss is supposed to be above this place, above this. So for us to enter this trade, we need to wait for a breakout to the downside, because this is a continuation pattern. So what do we have? So our next candle close broke this resistance line, but still closed in the wedge. After that, you see, price finally heads down and we have our breakout. So since we have our breakout, then our target should be here. So this is our target. After that, what do we have? See, our target finally gets hit. And like I've said previously, when you are trading wedge, it's good you enter multiple times so that when you get your target, you can close some of your positions and allow your profit to run. After that, what do we have? See, SASI price is reversing, and see what is happening. See how high price came. So if you close some of your positions and allow the rest to run, you make much more profit than just closing everything here. After this sustained bearish move, this is Aussie USD. You can see immediately price got to this place, momentum begins to die down. And you can see how steep this slope is. Slope very steep. Have this, and we have the support line, which is not as steep as the resistance line. So if we have something like this, this is an example of a falling wedge. A falling wedge is a reversal pattern. So like I said, wedge can either be a reversal pattern or a continuation pattern. But when you have something like this, this is a reversal pattern. So we watch out for a breakout to the upside. So when we have this, let's watch. See, the two candles are testing the support line. So we are not interested in selling this. So watch out for opportunity to buy. And this bullish candle now is giving us optimism still close right inside the wedge, so this is not. After that, we have this candle that broke through, so our entry should be after the close of this. So if, let's say we bought around this side, then we have this. And see how strong the momentum is. So like I said, our target level should always be the measurement from here to here. We extend that where the breakout occur. See, the target has been hit. But when you are seeing a signal such as this, it's not a positive sign. It's a sign for you to get out of the market. Because if you don't, you can see after this, you can see price started reversing. So it's always good to take profit at this point, but watching the candle that are formed after the breakout, that can tell you either you are to let your profit run or not. After this sustained bullish move, we got to a point when buyers and sellers begin to take a break, and we have this. So we have this and this. So like I said, a falling wedge can either be a reversal or a continuation. Like the third example, it is a reversal pattern. When you have this type of a falling wedge, it is a continuation pattern. So we look for opportunity to buy this instead of selling. So watch out. See the candle close. See how it is still acting. Now we have our breakout, but it's not. Let me extend this a bit. We have our breakout, but it's not as strong as I would like to. So at this point now, we can enter this trade and see. And as I've been mentioning earlier, your target should always be from here, then you extend it up. This is a daily candle, so it might look small to you, but it's not. So we have our target there, and see, finally our target got hit. Don't forget to give this video a thumbs up today if you liked it, and if you don't already have, please subscribe to this channel and turn on your notification. Thanks for watching. See you in the next video. Bye.